Good morning, everybody, and this is your S&P 500 technical analysis for this morning. And measured move was pretty much hit, which was this 44.83 or 44.84. Measured move was hit, and that was from the double bottom. I'll give that to you on the lower time frames now. So we're still looking to buy. Obviously, we don't want to buy here at the top. We want to wait for the pullback, and then we're looking for an opportunity to buy into this. Ultimately, 4,500 and 4,600 are still the targets that we are after. So let's just quickly get down to the levels we can trade. And you can see yesterday it was pretty much from when the video was, I gave you this measured move here of this double bottom. So we were obviously waiting, ideally would have been waiting for a pullback onto the structure. That never really materialized. I just want to just adjust that correctly. But nevertheless, you can see there's my measured move, was the previous high, and that's exactly where they started taking profit and where we started going sideways. So we have broken through. We've got a new high in place, so this is going to offer resistance and support if we can flip it. So that's 44.84. So 44.84 is the area we need to be paying attention to here. Actually, it's not exact. Let me just get that exact. It's probably a little bit lower. 44.83. Sorry, 44.83 is a level to pay attention to. So if we can hold that today, then I would expect that we're just forming some kind of consolidation for our next leg up to 4,500. So look at the hour, and you'll see the consolidation forming. Pretty much a range. 4,500 is very close. I do anticipate we do something there. We did close above that previous high on the daily. It is a close above a weekly high, no, not a monthly high. That is definitely a close above a weekly high. So at the moment, I'm just looking for structure, and this is the first bit of structure. The next bit of structure, I'm going to use this level here, was pretty much from the consolidation we had yesterday, and you can see very tight consolidation most of the European session before breaking away. So just coming down the 15-minute, if you're paying attention to this at the open, you would have seen nothing much happening here, nothing much happening, and then you had this first 15-minute green bar, opens on its low, closes on its high, right on the top here. And this next bar would have given you the opportunity to take a trade to the measured move. Would have been a smallish trade, to be honest. Actually, you probably could have done this on the 5 minutes. Let me just get there. So you can see during the European session, there's the European session, nothing. Then we have the opening. Let's get where the opening was. So this 5-minute bar here was the opening 5-minute bar. So you could see the golfing bar there pretty much closed on the level, and then you had this 5 minutes. So that would have given you 100-point odd stop loss, and you would have aimed for the measured move, which was 175 points. So it is possible, and that would happen pretty quickly. But again, it's scalping, and not really what I like doing. I don't have time for scalping. But at the moment, yep, any way that makes money on these markets is a decent way. Okay, so what are we looking for? I anticipate 4,500 is next. It's right here. So I anticipate we're probably going to just drift a little bit lower and then shoot up. Now the problem with this is it's right, so it's 127 points. So it's still a sizable trade, but could actually happen after hours. But then I would expect price to come back down and close the gap. Now, very important, ladies and gentlemen, very, very important here. We've had a nice green solid bar. You can see we opened on our low and we closed pretty close to our high. We've had a bit of a wedge form here, and it looks like we've sort of broken it in after hours trading. The big problem is we've got a weekly gap down here. Now those gaps typically do close a lot of times in the same week. So I wouldn't be too surprised to see us just go sideways and then fall over our feet and come back and pick up one of these levels. So that would be ultimate, is to get a pullback onto 44.41 for another attempt at 4,500. But I suspect what's going to happen is we're going to tag 4,500. I would take profit there. It'll probably bounce around, or it's going to have a pretty strong meltdown all the way down to the bottom here. Now that's a solid bull bar from yesterday. Let's just have a look at that on the daily. You can see what I mean. It's a solid bull bar. Oscillators just crossed over as well. So I would expect another green day, to be honest. So we've had 3 in a row. But on the other side of the coin, that could also be an exhaustion bar up to a level. So 50-50 call there for me at the moment. So right now, I prefer to buy the pullbacks. If the pullbacks are not going to happen, then if you've got time, get down to a lower time frame, sort of a 12-15 minute time frame, and you want to trade the break of the range with a stop right below this range. So your risk to reward is going to be fairly decent. If you look at this, let's get a measurement tool. So you're looking for a break above there. You're looking for a 50-point stop loss for a 90-point gain. So it's better than a 1-to-1 risk to reward. Okay, so that's kind of my view at the moment. There's also gaps here on the way up. So I'm anticipating we either get to this 4,500 and then fall, or we're going to roll over, come and close some of these gaps, possibly even sort of a proper red bar down at the bottom here, and then another green bar and a red bar and a green bar. So we just muck around in a range here until we break through 4,500. And that's kind of my view at the moment. Need to buy, want to buy, but not buying at this level, waiting for a pullback onto structure, and the structure is quite far back. So that's kind of the view that I've got at the moment. If we do break this range, then I will look at that as a trade, because it's a fairly decent setup. There's a very decent area for stop losses. You've got below these swing lows at the moment, and you can see bullish patterns all over the place on the 5 minute. You can see the inside bar, that's a piercing pattern, inside bar engulfing, inside engulfing. So there's a lot of bullish price action, but then there's also a lot of bearish price action as well, engulfing, inside bar, pin bars, etc. So just a bit of confusion, and that just means range as far as I'm concerned. That's your range there. Okay, so wait for the range. If the range does break, take the trade, put your stop below the bottom of the range, and aim for 4,500. If it breaks below the bottom of the range, I wouldn't be worrying about buying into it, selling it, because any one of these gaps here is going to attract people. They're going to attract buyers, so just be worried about that. Okay, anyway, that's it for me this morning. Hope it helps, and we'll catch up with you tomorrow morning. And enjoy the day. Cheers for now.